those lenders we have a relationship, and they're gonna tell us if it's a yes or no much faster than just you going to the bank. Because I'm talking with the partners in the bank, vice presidents in the bank, and the things moving much faster. It's just the nature of business. You have relationship, and let's say if I have $20 million with them right now, gonna send another deal, they're gonna pay more attention than just you going. That's the nature of business.
Welcome to CREPN Radio for influential commercial real estate professionals who work with investors, buyers, and sellers of commercial real estate coast to coast. Whether you're an investor, broker, lender, property manager, attorney, or accountant, we're here to learn from the experts.
Welcome to Commercial Real Estate Pro Network's CREPN Radio. Thanks for joining us. My name is Jay Darren Gross. This is the podcast focused on commercial real estate investment and risk management strategies. Weekly, we have conversations with commercial real estate investors and professionals who provide their experience and insight to help you grow your real estate portfolio. Today's interview is sponsored by Building Insurance and Risk. When you invest in real estate, it pays to work with a real estate investor protection specialist to protect yourself and your investment from catastrophic loss. The experts at Building Insurance and Risk focus on real estate investor protection. They provide you with multiple insurance coverage offers and a side-by-side coverage comparison. To learn more, go to buildinginsurancerisk.com. Today, my guest is George Otel. George is the seasoned entrepreneur with over 10 years of experience in real estate and finance. And in just a minute, we're going to speak with George Otel about business finance. But first, a quick reminder. If you like our show, CREPN Radio, there are a couple things you can do to help us out. You can like, share, and subscribe. And as always, we encourage you to leave a comment. We'd love to hear from our listeners. Also, if you want to see how handsome our guests are, be sure to check out our YouTube channel. You can find us on YouTube at Commercial Real Estate Pro Network. And while you're there, please subscribe. With that, I want to welcome my guest, George Otel. Welcome to CREPN Radio.
Hey, Darren. Thanks for having me. My name is George Otel. I'm happy to share my experience and insights with your audience. I always salute entrepreneurs, business owner, taking the risk, willing to participate in the it's a fight. It's always a fight. It's a fight for territory. It's a fight for clients, but at the same time, it's rewarding. So thanks for creating the show, for sharing knowledge and providing guidance.
Well, I'm delighted to have you, and again, appreciate you providing the enunciation of your last name. I apologize for that, Otel. But to get started here, can you provide a little bit about your background?
Yes. So I started in transportation. I had a trucking company 2012, 2015. Then 2015, 2018, I've done real estate. We were buying a short sale. We were doing short sales, basically buying distressed properties from the bank. Then 2018, I started U.S. business funding. So we start doing equipment loans for transportation for all the types of businesses, just equipment. Then a year later, we evolved in working capital, SBA loans, and commercial real estate. So we provide financing nationwide. Basically, the idea is you always need funding as a business. You always need funding. You need funding to stay in business. You need funding to grow the business, to stay in business, to open a business, and to buy a business. So we can help you with any stage of your funding needs, from 20 grand to 20 mil, 20, 30 mils, basically for buying multifamily or hotels, motels, any type of business. So that's kind of the idea. We we encourage people to work with the local banks, but unfortunately, local banks right now they risk reverse, and it's a it's some some defaults on the market and distress, and that's our job to provide multiple options for each funding company, because for each business owners.
So are you a broker then?
Yeah,
A lending broker? Okay.
yeah, I'm a finance broker. So we have departments for working capital, for equipment, for commercial real estate, and SBA as well.
Okay. And with regards to the financing, is there uh, like a threshold as far as a value that you guys are able to lend to? Is there a debt value percentage you're able to you
So we have over 1,000 lending sources. So we work with the private funds, with the private money institutions, REITs, and some banks as well. So it's all depends of your situation, because each situation is unique, and we lined up multiple options based on the situation, because it's all depends what you're trying to accomplish. You're trying to do an acquisition, you're doing to do a refinance, you want to do a cash out, you want to do a partner buyout, or it's all depends what you're trying to accomplish, because we have the options. We and The most important thing, we know what banks, lending partners are who is doing what. Basically, we understand who is active in the market, who is not active, and most likely we have some deals with them, and that's helpful, because you don't want to spend 30, 40 days with a institution that is going to say no at the end, because if it's a no, I'd rather know it in 24, 36 hours, then move to the next one, rather than just waste your time, because there is some for example, for a balloon, there's some loans that are due in a couple of months, and let's say you have like 3, 4 months left, so you don't have a lot of time to play around, to look for, just who is willing to do it. You just want to close the deal, otherwise you get in default.
So you bring up an interest, or not an interesting, but a topic I did want to dive into a little bit with respects to, getting a loan approved in that. Is there a kind of what am I trying to ask for? Is there like a blueprint for how to present your picture to more easily get an approval on a loan that you subscribe to?
Yeah, so we do a lot of owner occupied buildings. So the idea is, let's say if a business owner, they renting a building, most likely they qualify to buy it, because when they make the rent, they 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 pay for the mortgage as well, and for the landlord's vacation in a way, because that's how it works. We had someone recently, they were paying $10,000 a month in rent, then after we got them approved with 10% down payment, the loan amount, the monthly payment for the loan was $9,000. So they were paying less and they keeping the building. That's kind of the idea. Those are for SBAs, for owner occupied. But for other ones, it's basically we start like 500,000 to 30 million for the loan. So we do nationwide, we do bridge loans, we do financing, refinancing. So it's all depends, because sometimes they underwater and they don't qualify for long-term debt. So we do short-term debt, like 2 to 5 years, to optimize the property. Then we get a long-term debt lined up, basically.
Well, in specific to commercial financing, you mentioned these different terms of length of terms. Can you kind of elaborate? What's a typical length of time that like bridge financing is available?
Yeah, 2 to 5 years bridge. So you want to use bridge if the property is you want to optimize the property, then you do a long-term financing for that. And for example, if you find some a deal, and for institutional funding is going to take you 60 to 90 days to close on that. So you want to use short-term funding to just grab the property off the street, put it on your name, then you refinance it after that. Because a lot of times you gotta move fast. So we have funding option that they can move in 3 4 weeks to get it funded. Because with the banks, it's gonna take you 2 3 months to close the transaction. So you may, if you find something distressed or with a lot of equity, potential equity, that's your goal. It's your opportunity to get it off the street, then refinance it later. Because the whole idea is like you're not gonna get a distressed deal, like a smoking deal with the buy with the low down payment with the low rate. So it takes time to get there, but it's definitely worth it.
So in commercial financing, how much of the loan underwriting is uh, geared to the property as opposed to the borrower?
Okay. So, for example, there is SBA. We do a lot of those SBA, so it's owner occupied. So, 10% down payment available. As far as you occupy 10%, 10% of the, as far as you occupy 51%, there is option for a 10% down payment. Sometimes, if it's a strong business, it's 100% financing as well. And if we go conventional for just the institution or local banks, they want to see 20 30% down payment. So it goes higher down payment for just small banks or institutions.
So you mentioned the 10% down on the SBA. Is there a range that qualify, a range of loan amount that qualifies for SBA?
Yeah, 500,000 to 5 million, to 5 million nationwide. As far as owner occupied, 51%, you qualify for that. So you need at least 2 year in business and a 670 credit score, and basically the cash flow to cover the. Also, if you're renting the building, let's say you rent the building for at least 12 months, you qualify for 100% financing, basically to buy with 100% because you're making the mortgage already. So
Okay. And as far as the underwriting for, I mean, the property owner occupied, like you said, you're already paying the mortgage when you're paying
yeah,
the rent, right?
yes.
So the property seems like that's a check the box kind of thing. How significant is the underwriting of the business, the occupant, and then also the principal of the business? Do they is there a lot of deep dive underwriting into that, the
Yeah,
character
yeah.
and
So
finances?
yeah, basically we're looking at the deal. We're looking at the who is guaranteeing the deal and how he's gonna perform after that. And basically, when you're doing SBA, it's a little bit more work, but it's worth it because in the end, you're gonna forget everything, all the hustle, and you're gonna start building wealth. When you go bridge or just conventional loan, it's not that much work, but it's harder to qualify for conventional. For the bridge, you just pay a premium. That's the whole idea. You just pay a little bit more for the interest of the loan, but it's not that much work, and you can move faster. So that's for each scenario you have a different situation. But if you have time and you owner occupied, SBA is the best. And yeah, it takes time. It takes time. So basically, it takes me 24 to 24 hours to 3 4 days to get you the term sheet. Basically, you send me the financials. I get you the basically the term sheet, the pre-approval, and you can go shopping for the building. Because the best way to go shopping for the building is to have the pre-approval, and because you know how much you qualify for. Because you don't want to go shop for a $4 million building, then you find out you qualify only for 3 million. So you get you get pre-qualified, then you start shopping around, and when you find the property, the seller is gonna take you more seriously because you solid. You have the funding lined up, everything looks good, and you're serious. So we have couple situation recently that we got my clients got the property because they had a pre-qualification. They had the term sheet lined up, and they submit the offer to buy. They submit the pre-approval, and it looks much better.
Yeah, no doubt. As opposed to having a sale fail because you weren't qualified and you took it off the market for, the loan underwriting time and you lost out on any other potential buyers. So that makes complete sense. With respects to the loan process, or not the loan process, but the SBA loans. How long is the financing term on an SBA loan? Is it amortized over 30 years or is it
25, 30, 25,
25 to
30.
30?
Yeah.
Okay. And then how long is the rate hold? I mean, does the rate hold for the full term or does it reset?
So there's two types. There's fixed rates, and there's adjustable rates. So it's all depend. If it's a strong company, you can do a 504, and it's a fixed rate. If you need to do a projection, basically it's not cash flowing really good, so you do projection basically on a 2 year projection how the whole thing is gonna change, how you're gonna evolve. So that's a 7A loan, and that's it's adjustable rate. So it's based on prime. If the prime goes up, the rate is gonna go higher. It's gonna readjust every quarter, but recently we had some of my clients that they bought properties last year. It was like 11%. Now it's 10.5, and some of them are 10. So most likely we're gonna get some rate cuts in a fall to end of the year. So it's gonna help. It's gonna help. But the interesting thing is you buy in when the rates are higher, so eventually gonna go lower, and you don't have that many buyers, so that's your advantage. You're gonna pay a little bit of premium, but you're gonna get the property, then you refinance. So basically, once we got the property, 18 24 months later, we're doing the refinancing. So whoever have the rates for 10 and a half, 10 now, in basically after 18 months, I give them something with like 7.5. So that's what I'm doing with my clients. So you grab the property off the street, you wait for 18 months, we refinance, and then you're much better situation, and your payment is much affordable, and you're saving more, and you building equity.
Got it. So you mentioned pre-qualifying. Is there a kind of some parameters that you can describe to the listeners for how one, how much you can qualify based on? Is it your balance sheet? Is it your income? Is it the
Yeah.
revenue that the property is going to generate?
Yeah, so basically we were looking at the P&L balance sheet, how much debt they having in tax returns, because you gotta align everything to make sure it's covering the cash flow. Because a lot of time we see nice P&L, nice balance sheet, but you look at the taxes, it's not there. So it's a combination of everything, and on top of it, we do our underwriting in house. Also, every lender is different, so they adjusting based on their underwriting criteria. So it's different, but at least we know who is who can do it. And another important thing is those lenders we have a relationship, and they're gonna tell us if it's a yes or no much faster than just you going to the bank. Because I'm talking with the partners in the bank, vice presidents in the bank, and the things moving much faster. It's just the nature of business. You have relationship, and let's say if I have $20 million with them right now, gonna send another deal, they're gonna pay more attention than just you going. That's the nature of business. It takes time to build up relationship, and it's worth it, because I do the work for them before I send them the file. We arrange everything. We do the pre-qualification. We kind of have a better understanding. So if I know this lender is looking for only A and B clients, I'm not gonna send them C clients. So I'm doing a lot of work for them, and then they like our files, and it's because you get the idea. There is 7 8,000 lenders nationwide, and how long it's gonna take you as a business owner to understand the criteria and how they think. And sometimes they gonna sell you, hey, I can do this, I can do that, but you know, you can ask them as a business owner, how many of these loans have you done in the last 12 months? Because if you didn't do too many, you're not familiar, and it's gonna take you more time, and you may decline me in the end.
Yeah, no, that's definitely an important aspect to borrowing money. You want to make certain that you're working with a potential yes as opposed to just an exercise in going through the all of the finances there. Um, so you talked a lot about the owner occupied with the SBA. Is SBA also available to non-owner occupied?
No, they want to be so for investments. We have institutions, we have other banks, we have private lenders. So if you are looking to buy like a triple net lease or multifamily or franchises or any other things, we have other funding. So it's 20, 25, 30, sometimes 30%, depending on the property. So that's kind of the down payment. The rates are different. It's all depends. So, but we have option. We have options for that, for multifamily, for industrial, hotels, motels, restaurants, business acquisition. So it's available. Whatever you're looking to do, it's available. If you're looking to refinance commercial property, let's say you have a $4 million property and you wanna pull up 1 million from it to to refinance it to cash out, we have options for that. Mostly anything commercial nationwide, we get it done.
So can you describe the rate difference between like a new purchase versus a refinance versus a cash out refinance? How much variation is there rate between the three?
So it all depends on the whole situation. Let's say if everything it's a strong borrower, that there's not such it's not like a big difference in the rate, because if everything is strong borrower. But when, let's say, when the borrower doesn't have too much experience, where the property is not cash flowing that much, then they we need to do, basically the lender is taking more risk, and it's a premium for the basically for the acquisition. Also, premium for the refinance when the property is not cash flowing. Because let's say you've been there for 2 3 years and you have a balloon due in 1 year, and you didn't have enough time to optimize it, then it's a risk too. So that's it's all about the risk, as you mentioned, risk in the beginning. It's how you adjust to the risk. That's because you cannot avoid the risk. You just minimize it. So, how to
Mm.
minimize the risk?
Yeah. Well, speaking of risk, I'd like to shift gears if we could for a second here, George. As we discussed before we get started, by day I'm an insurance broker, and I work with my clients to assess risk and determine what to do with the risk. And there's three strategies we consider. We first look to see if we can avoid the risk. When that's not an option, we look to see if we can minimize the risk. And if we cannot avoid nor minimize, we look to see if we can transfer the risk. And that's what an insurance policy is. It's a risk transfer vehicle. And as such, I like to ask my guests if they can look at their own situation. Could be your clients, could be interest rates, could be political winds, could be job market, whatever it is that you identify and consider to be the biggest risk. And again, for clarification, while I am an insurance broker, I'm not necessarily looking for an insurance related answer. And so if you're willing, I'd like to ask you, George Otel, what is the biggest risk?
The biggest risk when it comes to funding is not looking for funding early enough. Because the biggest risk is when people call me that they need funding yesterday. So I tell people you always have to look for funding even if you don't need it, because when you need it, you may not find it, or it may be too expensive because of your situation. Let's say you got to look for funding when you're doing good, when you're doing great, because the lenders see less risk in you. Because when you're desperate, you have a need, you're on fire, you're burning, then that's a risk. So for the risk, they want to get more premium. So that's how it works. The biggest risk is like if you always got to look for funding, because it's you got to have funding options lined up, because you're always growing, you're looking for equipment, you're looking for working capital, even lines of credit. We have lines of credit. So I tell people, you rather have those lines of credit and not use it than you need it and you don't have it, because that's another thing. So for example, there's a lot of loans due right now. There's a lot of balloons due, and banks would like to, when you approach them like 5 6 months in advance to your balloon, you don't want to wait 2 months, because it's too late. It's gonna take 2 3 months to go to the process. So once the balloon is done, it's you're gonna be in default. So it's because you gotta refinance before that. So the biggest risk is not looking for funding early enough. And again, in the good times, the banks, local banks, are really good. I love my local banks, but we are in uncertain times. A lot of volatility, and they don't like risk, so they avoid risk. Also, private money lenders, they more risk. They have more appetite for the risk, and there is a small premium, and obviously it's worth it, because you rather pay a small premium and get your funding lined up than have no funding option and be in a unpleasant situation. So also working with a funding finance broker like our company, because we have multiple options lined up. So basically, when the clients come to us in 10 15 minutes initial conversation, we present them multiple funding option. We ask them about how they position their assets, the cash flow, how everything works. Then we present them multiple option, because when you go to the bank, to the local bank, they give you one option and it's a yes or no, but we have different option lined up. So if this one doesn't work, we're moving to the next, and so on, until you get the funding and you getting the results you need.
Got it. George, where can listeners go if they'd like to learn more or connect with you?
They can find me on LinkedIn, George Otel, also on our website, usbusinessfunding.net or usbizfunding.net.
Got it. Well, George Otel, I can't say thanks enough for taking the time to talk. I've enjoyed it, learned a lot, and look forward to talking to you again soon.
Thank you, Darren. Looking forward for the next one. Have a nice summer.
All right. For our listeners, if you like this episode, don't forget to like, share, and subscribe. Remember, the more you know, the more you grow. That's all we've got this week. Until next time, thanks for listening to Commercial Real Estate Pro Network's CREPN Radio.
You're listening to CREPN Radio for influential commercial real estate professionals. For more information on this or any of our guests, like us on Facebook, CREPN Radio.